Welcome to Policy on Demand's Week in Review. I'm Pam Olson.
What would you tell clients are your takeaways from this week?
The key takeaway this week was the House vote to restore three business tax provisions: the deductibility of domestic R&D expenses, the DA, depreciation and amortization, to the calculation of the limitation on interest deductibility, and 100% bonus depreciation. The restoration would be retroactive to 2022 and run through 2025, meaning the provisions will next expire along with a number of other expirations and scheduled changes that flow from the Tax Cuts and Jobs Act. The bill also includes an expanded child tax credit, an expanded low-income housing tax credit, expanded Section 179 small business expensing, disaster tax relief, and Form 1099 information reporting relief. The provisions would be paid for by suspending claims for the employee retention tax credit as of January 31, 2024. The vote was overwhelming, 357 to 70. Just great bipartisan support for a bill that was negotiated by Ways and Means Chairman Jason Smith and Senate Finance Chairman Ron Wyden. Despite the significant bipartisan support, the bill will face challenges in getting through the Senate, so there's still more work to do.
Which question related to policy did you get asked the most, and how did you respond?
Despite the legislative activity this week, thoughts are turning to 2025 and what the various expiring provisions from TCJA will mean. Republicans are making clear that everything is on the table in 2025, so nothing should be taken for granted. That is leading to consideration of some of the base broadening and tightening provisions that were included in the TCJA and whether relaxing them would necessitate offsetting provisions, such as an increase in the corporate rate. The fact that the House passed extensions bill is fully paid for sends a signal that concerns about the federal budget deficit are likely to constrain tax legislation in 2025. While expiring provisions have generally been extended in the past without revenue offsets, the past may no longer be a good predictor of the future.
Where should companies focus their attention in the coming week?
Companies that care about the three business extenders need to focus attention on getting the House-passed bill through the Senate. It will be helpful to remind senators and staff of the impact of the provisions. R&D expense, as an example, is mainly wages. Losing the deduction means companies paying tax on a calculation of profits without a deduction for wages they've paid employees. That's a key point, especially for small business and companies that have been lost companies, looking back to the restoration of the deduction to 2022, as well as looking forward.